Naspers is a multinational media giant with stakes in internet businesses in emerging markets, pay TV and print media. The group's most significant assets are a 35% of Chinese internet company Tencent and wholly owned DStv Multichoice in Africa. Naspers has a market cap of 190 billion rand, a price to earnings ratio of 38 and a dividend yield of 0.6%. Let's get into Naspers. Paul, we had Naspers shares falling back after that whole Facebook IPO, with some investors saying that this was a bit of an overreaction, or some saying that Facebook will eventually make money.
So those are the current issues, but let's just go back a step. Naspers, Nationale Pers, sort of a business built on textbook production and print media, newspapers, which was in the old era dominated by the desire of Afrikaner business interests to proliferate their ideology through the newspapers, so the Burger, the Beeld and so on. Long way from that now. Koos Becker came to the fore. They spearheaded the development of pay TV in this country, because when pay TV came along, it was decided by the government of the day that it should be controlled by the media groups. So they basically consolidated their holdings in DStv Multichoice, which obviously owns the satellite distribution DStv business, which you're watching if you're watching this show tonight.
Definitely.
Globally, though, they've got a fantastic portfolio of interesting internet assets, because they went out in the last 15 years and basically took stakes, strategic stakes in lots of businesses, principally Tencent in China, but then also businesses in Russia, Eastern Europe, Latin America, all over the show. And they really have put together what I think is the sort of preeminent emerging markets internet stroke social media portfolio, and it's on that basis that they're starting to attract a lot of attention in terms of people interested in that sphere.
So looking at that emerging market strategy, is this still the way to go for Naspers?
I think so, because obviously people are excited about Facebook. I think Facebook had a bit of a wobbly listing, but it is still a company that a market cap of around $80 billion. Tencent is a very profitable and very well-established company in China, where there are 1.3 billion people, and they have like 500 million users to their chat forums and their other businesses, micropayments and gaming businesses. So Tencent's a great business, and 35% is a fabulous thing to have. They've got stakes in the biggest Russian internet companies. They've got stakes in the biggest Turkish internet companies. The DStv business is a fabulous cash cow while we're back home looking at it. So I really think there's a lot to be said for this one.
Your thoughts on Naspers, Jonathan?
Yeah, well, I actually agree with Paul on quite a number of matters. With Naspers, you've got to take a look at it, and you've got all these internet assets. So you go, well, where, let's try break it down and try get a value to this. So let's look at the biggest part. So obviously the biggest part is Tencent. Now Tencent's been growing massively. It's on a 33 PE, listed in Hong Kong. They own 35%. If you just back out Tencent, that's 150 billion of the 180, 90 odd billion market cap. Now, we've obviously spent quite a lot of time looking at Naspers, and looking at Tencent, and do we think Tencent's worth 150 billion? We give it a bit of a haircut. We think it's worth probably 120 billion. Then you look at what's the next biggest asset, the pay TV business. Great business, market dominant, love that. Love that business, love anything that's market dominant, because it's very difficult for somebody to displace it. Also, it's African growth, it's really good. So we, again, put a bit of a premium on that. We think that's worth about 60 billion. So you put those two together, you've almost got the market cap of Naspers. Now there's a whole lot of other businesses. So the one way of thinking of it is I'm getting Tencent, I'm getting the pay TV business, and then I've got this free option on all these other assets that they have.
Let's look at Tencent for a bit. It hasn't really been smooth sailing for them this year. They posted the smallest profit increase since 2005 this quarter. They did, but they're investing. We expected it. I know the market was a little bit disappointed, but they're investing a lot into their platform. They're spending a lot on developing new businesses. They've now opened their platform to allow other games onto their gaming platform, which I think is a very sensible move. Looking at the PE at this stage at 38, Paul, you buying into such a stock?
Absolutely. I think the social media revolution and the way it's changing society has not yet been fully appreciated, because the platforms are still in the process of being developed. So a couple of years ago, people didn't have smartphones. Now everybody does, that counts, and accordingly they're starting to move their lives onto these platforms, both in terms of interacting but also in terms of learning, taking on news, shopping, transacting in terms of bills and that kind of thing. So I think if you wind forward a couple of years, you'll find that the revenue that these companies are able to capture will be even greater. And I don't think one should be ignoring the value of the Mail.ru business in Russia, Marcofoni in Turkey, Bibo and all these other things in India and so on and so forth. So I think when you put all of it together, fantastic assets, a little bit tricky to know what it's worth, but I think you've got to be there. And I think for South Africans locked into rands and with issues around exchange control, this is one of the new media businesses that you have to own in your portfolio.
Am I hearing a hot coming along here?
Definitely something we own, something I own personally, and I'd encourage people to load up at current levels.
Hot or not, Jonathan?
Look, I'm always very hesitant of buying a company when there's large PEs because you're paying a lot for the growth that's coming. But I can see the growth coming, and it is hot for me. We own it and we like it. So yes, it is hot.